Hello everyone, welcome to this week's edition of the Fibonacci Review, where today we're looking at the euro against the US dollar. Now this is a massive market, literally billions and sometimes trillions of dollars change hands every single day. And what we can do is to use the natural harmonic code of the Fibonacci series in time and in price. And today I've got a couple of examples of both. Now, when we look at the particular chart here on the daily chart, you can see a major low, September 28, 2022. The next peak was July 19, 2023, which has just been broken. So in between those 2 points, we can use the Fibonacci ratios to find support and resistance levels. And that's what trading's all about, finding support and resistance levels. So if we go into the chart tools, we use the Fibonacci retracement tool and we anchor that to the low and we bring it up to the peak. And when we do that, we're simply taking the range or the distance between those 2 points and separating it and dividing it by the Fibonacci ratios. And these will be the numbers that we're going to watch for future turns. If it gets support or resistance on these levels, then you might want to really pay attention. You obviously have other tools, signals, techniques, and strategies you like to use, but this will be a very early warning about a potential support and resistance point. And then all we need to do, as long as the market's above that low and below that top, we just keep dragging it across to the right-hand side for as long as the market stays there. And if you have a look here recently, in January 2025, the market made a double bottom low at the natural harmonic code of 61.8%. That's the natural Fibonacci ratio. And from that point, it went from 102 all the way up to 1.14. Now that's a fabulous run. And what you take out of that's entirely up to you and your trading plan. But you got very early warning here that the market was very, very close to a significant level. And if it has a bounce, that could be part of the opening process of a trade for you. Now that's the Fibonacci sequence in price. W.D. Gann, whose work I've studied extensively, told us that time is more important than price in his research. And what he did was he used numbers to find time counts that are likely to create resistance levels. And the number 144, which is a Fibonacci number, was a very powerful number in his work. He loved this number. At one point he said it was his greatest discovery in trading. But what we can do is have a look at that and see exactly what he means. He just kept time counts from major tops and major bottoms and then looked for the distance in time from those starting points. Now, let's just give you a couple of quick examples. If we take a time factor from this significant top, which occurred March 8, 2024, and if we run that across to the next major peak, and as you can see, that peak occurred the 25th of September 2024, and the distance between them, 143 trading days, which means that day 144 was a reversal count. It's a double top, so there's a pattern there and there's a time factor there. Once the market confirms it, Gann was getting short because he knew the power of these numbers. Here's another example. If we take a time count from the left-hand side of this double top and bring it down to the major low that we were just looking at, you can see through here that's 143 days from top to bottom. Again, another fabulous strike on the 144 count. So we can see from here, it could be trading days, it could be calendar days, it could be weeks, it could be months, and it could even be years. But there is a fabulous opportunity for simply keeping a time count from major tops and major bottoms and then watching what the market does. And at this point, when the market does a Fibonacci number at a Fibonacci retracement, it opens up an opportunity. It means that if you're in short, you need to be watching this carefully, managing the trade as you see fit, and when it double bottoms, obviously creates an opportunity for a long position. So I hope that makes sense. And of course, any questions or queries, you're welcome to send them through. See you again next week with another look at this fabulous Fibonacci technique in trading. Bye for now.